Welcome back, everybody. The spread of the coronavirus is forcing the cancellation of events from coast to coast, and it's stressing state and local budgets that are already stretched thin. Scott Cohn is in Chicago. He has more on this front. Scott, good morning.
Good morning, Becky. Behind me, the giant McCormick Place Convention Center, which would normally be a beehive of activity these days, the days leading up to the International Houseware Show, which is one of the city's biggest conventions. Well, that's canceled. That's 56,000 people who won't be here. A cardiologist convention later in the month has canceled, a couple smaller conventions. In all, 92,000 people who will not be coming to Chicago for an economic hit to the city of about $184 million just in the month of March. At the Chicago City Treasurer's office on the first floor of City Hall, they actually run a small trading room where they manage the city's $8 billion in operating funds in this crazy market.
Talking about our current policy. We're talking about if we need to make any changes, what we need to do to make certain that we protect taxpayers' dollars and make certain that we're able to withstand what's going on in the market today.
Now, convention and tourism revenue is a small slice of the city's overall revenue. A bigger concern, the city's 4 pension funds are just 23% funded. The lower interest rates don't help them make up that gap, and it means that the treasurer's going to have to look to what contributions they have to make to keep those funds going. And while the municipal bond market has been a pretty friendly place for both investors and cities of late, consider this: the agency that runs this convention center, which is separate from the city, just warned investors that if these cancellations continue, it could be an issue. Guys?
Scott, one question. The city's 4 pensions are 23% funded based on what numbers? That before the losses we've seen the last few weeks?
That's before all of this scare. That they are, it's like a $28 billion or something shortfall. There is the legislature has mandated that by something like 2050, they're supposed to have these pension funds funded or substantially funded. No one's quite sure how they're going to get to that. And when you have this low interest rate environment and you have this pinch to just the tax revenues, it just creates all sorts of issues for that. It's really just a massive issue in Chicago, in Illinois, and really across the country. Are you going to be doing a tour around the country with some of these things? I start thinking about other places where maybe it's bigger impact. Florida, Well, it's certainly something that we're looking at, and we'll be looking at it as we start to ramp up to our top states for business coverage later this year. You look at the oil states, one of the things that we want to look at, Texas. Alaska has taken a big hit to their permanent fund, which is based on their oil wealth in the state. New Mexico, North Dakota, when you have the situation going on with oil prices on top of the coronavirus, a lot of states and a lot of cities are going to be looking at this. So while so much of the crisis with COVID-19 is sort of fears of what's going to happen, there's some real economic impact going on as shows cancel, South by Southwest cancels in Texas. It's really something that all of these local and state governments are going to have to look at.